Welcome back. Hope you're having a good morning. Well, the bulls will be feeling good. You know, when you have the SGX50, they're suggesting a 100-point downtick and 15 minutes into the trading session. Well, you're sitting with the cut-off only around 30 points. It's a good start, but let's see how this one ends. But let's invite our next management as promised. IGL's Q3 earnings, well, they were largely in line. But there were many tailwinds for the company in terms of gas pricing ahead. The company's margin saw a decline on a sequential basis, with both the volumes and the EBITDA per SCM were absolutely in line. Mr. Sanjay Kumar, the MD of IGL, joins us to discuss more on the way ahead from here on. Hi, Mr. Kumar. Thanks so much for joining in. Well, earlier you had guided that volumes this year will be around 9 SCMD. And EBITDA per SCM for the past quarter was around 5.7. So tell us first on volumes, will you hit that 9 SCMD mark? And where does the EBITDA per unit move from here? Go ahead, sir.
So thank you for having me here. The EBITDA for this year, for the next year. For this year, we had projected to be around 7 rupees per SCM. And for the next year, we are projecting about 8 rupees per SCM. The volume this year, we had projected at about 8 million cubic meter per day, which we should get by the year end in next one month. And for the next year, we are aiming volume of about 9 million cubic meter per day for the next financial year. That is what we had projected earlier also.
Okay. All right. So you're maintaining that, right? 9 million is volume and 8 rupees is the pricing.
Yes.
Okay. Okay. Got that. Could you tell us what is the current gas sourcing situation? Split? How is the split now between imports and domestically allocated gas?
So we are selling in CNG and PNG. We are selling about 7 million cubic meter per day. Out of that, 6 million comes from APM, non-APM pool, and remaining comes from the market sources. That is from our long-term LNG contracts, RLNG contracts, and the market that we buy from exchange or from other spot contracts that we are buying. Effectively, the tailwind that you are referring to is about the pricing. So the pricing that we are on the cost side, we are paying is about 49 rupees or 50 rupees approximately per SCM, which is very high. And accordingly, the impact is there in the quarterly profitability numbers. We have always maintained the policy of keeping the volume intact. The volume growth should be there so that the conversions continue, and we would let the market be there rather than look at the short-term profitability.
But can you lower the sort of sourcing cost while you keep volumes high? I mean, is there any way you can do that?
Yeah. So, as per the policy of the company, we have not been maintaining very high prices of CNG. If you compare the price of CNG of IGL, it is always, lower than the average, the median pricing done by other CGD entities. And there is a good development, and you may be aware about this, that the Kirit Parikh committee report is already submitted and is in processing for approval by government. And the moment that comes into effect, it would help us with better margin, and we would be able to get, even more profitability than the last quarter that we had.
Okay. All right. Well, Mr. Kumar, will you now look at increasing prices? Between your peers, I think you were the only one who did not increase price despite the hike in pan gas prices. So will you be looking now to push through prices? And how is demand?
So the demand is growing. We are selling about 8.2, 8.3 million cubic. That's our overall sale. It includes industrial, commercial, and other sale also, in addition to CNG and PNG that we are supplying to our GAs. So the price increase is not on our radar as of now, because we are at prices which is very near to the diesel price, and we would not like to lose the market. If we increase the price any further, it would hit our market. The conversion rate of vehicles which we have seen in January going up, it has increased in January. This must be the only company where the vehicle buying of CNG vehicle as well as conversion of vehicle has improved in the month of January.
Right. Could you, you mentioned that Kirit Parikh, it's the report which is awaiting approval. Any sense on by when should that get the go-ahead? Any feedback you've gotten?
No, I don't have any feedback, but these proposals take typically, many weeks for approval. It should be, implemented shortly. That is our hope, and that is the sense that we have from the industry players who were a part of that committee.
Okay, all right. Mr. Kumar, we are located here in Maharashtra, so we would like to know whether you look at acquiring smaller CGD companies, either in Maharashtra, either in Karnataka. Anything finalized out there? And will pan-India expansion be your plan now to increase volumes?
See, this business of CGD is actually slightly different, and if there is an opportunity, we would always look at it. We evaluate all the opportunities, what kind of pricing we attach to it is very important. So we would not
Are
like
you
to
evaluating,
compromise.
Mr. Kumar, are you evaluating any such opportunity as of now?
See, these are, strategic discussions that are held in the company, and I would like to pass this question.
Okay, all right. Sir, good morning. This is Sonia here. I just have one question. The government has capped these HPHT gas marketing margins for traders, which is a type of a gas source. Can you tell us what is your percentage of sourcing from HPHT? What has the price level been capped to, and what would the impact be?
We don't have any direct contract as of now of HTHP gas, but we buy a lot of gas from exchange, and some of it may be HTHP. The circular that particularly of the circular of Government of India that you are referring to actually has one provision which says that CGD entities would have first priority in getting that gas whenever it is being sold at the ceiling price. So that will help all the CGD entities, wherever there is a shortfall, because you may be aware APM non-APM gas is limited quantity, but the market would grow in coming years because of these 550 districts which are going to be connected with CGD entities with gas pipeline. We expect the consumption of CNG and PNG to improve, and to improve multifold. And that is where the sourcing of gas from HTHP would come into the play. And this is where the government support is very valuable for CGD entities, because most of the GAs are in evolution phase. They are in nascent phase, and they would like that kind of support. That's a very good move by Government of India, wherein CGD entities would have first priority in HTHP gas. Having said so, the price of HTHP ceiling presently is more than $12, and that will create challenges when we are trying to service the customers, because of the ultimate limit of alternate fuel, which is diesel, petrol, and LPG that we have in our market.
All right, so we leave it at that. Thanks a lot for joining in, and all the best for the future. That's the word coming in from IGL. The market, by the way, is very quiet. It's actually